We saw a pretty rejective candle coming off of yesterday's close, with most of the prices smacking down pretty hard during the late hours of yesterday's close. And the question begs is, are we going to be going lower? Is there going to be a final flush, or is this still the last opportunity to get into certain positions before the breakdown of Bitcoin dominance? We'll discuss this and a whole lot more in today's show. Smash the like button, hit the bell notification. If you're not already subscribed to the channel, then subscribe, hit that bell notification, and let's get straight into it. So a lot of the coins still coming down over here on the hourly. This is following a pretty big move yesterday, flushing the late leverage longs. We saw quite a series of liquidations. I think it was somewhere around 400 billion. We'll have a look at that just now. Most of those coming off the long side. Liquidity still building above price action over there, which still creates the possibility of the short squeeze. But of course, the market is going to be shaky throughout this week due to a twofold reason, right? Of course, the one thing is due to all of the war scares, which are still currently going on. As you can see from 𝗙𝗘𝗓 letter, President Trump at least President Trump proposes last-ditch effort to stop Iran-Israel war. Apparently he's on his way there to actually discuss things in person. So we'll see what comes out today. And then the other thing that, of course, the market is looking at is everything around the FOMC meeting, which is coming up. And oil prices are going higher, which infect inflation at least, right? So if you look over here, oil war heating up. Iran says no ceasefire, war under attack. Israel strikes Tehran again. US says it's not involved, but it sends their aircrafts in that direction. So a lot of confusion in the world. Oil spiking over here above 70, and that brings those inflation fears back. If we do go back to trueflation, which gives us up-to-date information in terms of what's really happening with the inflation, well, you can see it started to spike up again, right? Ever since early June over there, it came all the way down below 2%. And it started to rise, sitting right now, as you can see, at 2.1%, which means that the Fed are probably not going to cut interest rates. In fact, they're more justified to raise interest rates in this environment, which is absolutely wild. If that does happen, it is going to drop the markets again, right? There is definitely going to be another drop to the downside, but we'll find out more about that coming up soon. If we have a look over here, that is on Wednesday. It's going to be 10 p.m. my time, so probably late afternoon if you're in the US on Wednesday, which means we'll have our next major market move on Thursday, which means we have the Monday range, right? We have the Monday range, which has essentially been set in motion. Here it is. So I'm going to give you the quick spoiler. What you're looking at over here is if there is some fears that come into the market and any sort of news-driven events around the war or anything that comes out from the FOMC on Wednesday causes a drop below the Monday range low, that becomes your buy, right? Alternatively, if obviously price continues to float up and you spike above the Monday high and that deviates before the event, so maybe over the course of today, Tuesday, you run up into that, and then something comes out around the war or the FOMC, that creates your deviation over the top of the range. That creates your short trade where you're trading it back down to the bottom of the trading range. We'll talk more about the Monday range strategy in a bit, but big ranges, that's on ETH, 6.5%. If you look at Bitcoin over here, your range between the low and the high is going to be 3.83%, which is pretty huge. Look at this one, Tron, because they supposedly want to list as a public company. So that created a massive spike. That's giving you almost 10% trading range. So there's going to be a lot of opportunities over there for the low time frame traders. We'll talk more about that at a later stage. But right now, as it currently stands, pretty much 0% chance that they're going to be cutting interest rates. In fact, surprises are not starting to price in an interest rate hike, right? So for now, 99.9% probability the interest rates will remain completely unchanged. And here's the oil price still coming into a very key level. This is your 200-week moving average over here, which is coming towards the downside. You failed to close oil above that. So again, it is just another lower high. And that's ultimately what you'd want to see if you want to see the markets, the crypto markets and risk on markets move towards the upside. You want to continue this trajectory of lower lows and lower highs. So we're on the cusp of, I guess, the next major move based on a lot of news-driven information over there. For any of you that do want to trade oil, if you're looking for a short trade over there off of that rejection, there's actually some quite exciting news. Oil is now listed over here on Bybit. which is unbelievable. You can trade CFDs and a whole bunch of different pairs, Forex, everything. There's a link in the description below over here. They've recently just allocated that. So you got gold, Forex pairs, indices, a whole bunch of things. They might even be listing derivative versions of different stocks in the form of CFDs, right? So use the link in the description below. You can actually get up to a $30,000 sign-up bonus if you do want to trade those things. And we're trading these pretty aggressively in 𝗬𝗚, right? There's gold. This is one of our traders, Farouk, looking for the short trade, scalping the markets over there. And then we have also Wall Street Singh giving a whole lot of different trades over here. I do want to remind you, a lot of you can actually get into this specific section for free. There's a link in the description below to Whale School. You need to join Whale School if you do want to get in over there. Our traders are absolutely crushing it in 𝗬𝗚 as well. All the links in the description are below for those of you that want to join. So we've covered TradFi. The main things that we're looking at over there, of course, the S&P 500. We're looking at oil. Let's actually quickly review the S&P 500 just quickly on the weekly time frame. So still grinding right into that resistance area over there. The expectation is still that there's a high probability that this is going to expand towards the upside. And ultimately, then you would have experienced pretty much a V-shaped recovery. So big SR flip, we identified that as a super key level to hold on the daily time frame. And ever since then, it's been melting towards the upside. So if oil rejects, expect that the S&P 500 is probably going to melt through this level over here. The other good things to look at if you're looking for easy trades in the market, gold and silver, right? Gold and silver. I'm not going to go into those right now, but put gold and silver on your charts over there. If you want to trade them on Bybit, you can do so over there. So let's get into crypto very quickly, having a look at the long to short ratio. Pretty balanced over here, almost 50-50. Huge liquidations, most of those coming from the long side. 213 million on the long side, 156 million on the short side, giving you a combined almost 400 million, which is pretty big. Sizable amount, not as big as what we saw the last couple of days, but still noteworthy. Liquidations on Bitcoin are building both above and below price action over here. So you're forming a pretty tight trading range, which means that it's very possible that if none of the news-driven events drive the next major move for the market, then you probably are going to be caught within a trading range, and that could last for quite a while, which means boring times for crypto. That realistically could last as long as about, I would say, 4 to 6 weeks. So be mentally prepared for that. If you don't leave the trading range this week, most notably, that means price action holding above $111,000 and continuing up, or alternatively breaking below the bottom of the trading range, losing that key $100,000 region, then that means that you're going to continue to just be range bound. So right now, if we have to draw a line in the sand, this has been the line in the sand. It's the yellow line over here, and I'll give you the exact price. Let's just quickly click on that over there and make exactly sure. So there's your exact price written on the right hand side, $106,145, right? Price action is still closing above there marginally. It's really struggling to do so. As long as bulls can maintain above that level, we have to give them benefit of the doubt, slight edge, that they probably going to slowly continue to grind price towards the upside. Remember, from a moving average perspective, you have a lot of different moving averages underneath price action, which are going to be acting as support and grinding price higher and higher. So you want to see multiple candle closes above there. If you start to break back below, then yes, you have major support coming in just below $100,000. The one warning sign for the bulls still remains exactly this, and that is the declining volume. The volume is coming down. You need to see new volume coming into the market. And if Bitcoin is to maintain the trajectory that it's had within price cycles at this point in time, we're nearing the end phase. It means that you need to see new volume come back in very soon. That'll be your first indication as to the directional bias and where things are going to be going next. If bulls do put in a big spike high over here and you start to take out that key level, and that comes with high volume over here, then that'll be your first indication that the breakout is absolutely 100% real and you're entering into the final phase of the bull run. I'll show you what that looks like in just a minute's time. With that being said, you would expect that the daily exchange volume should also rise. And in fact, this has definitely been struggling. You can see oscillating around there, really fighting hard to defend that $32 billion mark. So in terms of, the late phase or the end phase of the bull run, where I just said if you expect a breakout above this that's met with high volume, what you would then see is a follow through over here with a catch up, with the purple catching up to the green and the yellow. And if we zoom in over here, historically, that has been where things start to really get moving. And that leads into the end phase of the bull run. Remember, we can work this out based on timing from the cycle low or from the halving cycle, whereby these cycles last approximately 1,000 to 1,100 days. Right now, we're currently 950 days in, which means you have to be realistic. You're not early in the bull run. You are looking at potentially 2 to 3 more months, and you might see a major top. But those last final percentages in terms of if we're about 80-90% of the way through the bull run, that last 10 to 20% usually provides the most crazy times. Parabolic advancements, massive moves across the board, and we're still waiting for the breakdown in Bitcoin dominance. And if you get that breakdown in Bitcoin dominance, you'll see a massive flow of money coming back into the crypto markets, into other altcoins, and things should start to move very quickly. But I do think this is very important, right? Let's quickly click on this comment over here from It's Ray. You know, you can't trust low volume. Absolutely, that's 100% true. Retail is still asleep. They're not even here. Hardly any retail. If you want retail to come send this video to 5 non-crypto friends and ask them to join us, right? Before things actually do get too late. But it's true. We've hardly had any retail coming into the market. And it's definitely a warning sign that the volumes are very low over here. Most of the price moves towards the upside are absolutely being driven by institutional adoption. Nation states adopting crypto, Michael Saylor bid, ETFs, etc. That is why Bitcoin has moved up so significantly, about almost an 8x since the lows, whereas altcoins haven't, right? Altcoins haven't done much, barring a select few. So we do need to see volumes come back into the market, and that's where we'll know if we're entering this final phase of the bull run. So price for now for Bitcoin specifically is above the 21 weekly exponential moving average, and in fact consolidating above this range high over here, with that massive support coming in at $96,000 or $97,000 in terms of that 21 EMA is actually really bullish. What that means is even if you do see a spike towards the downside, the probability is incredibly high that you're going to bounce immediately off of that 21 EMA and recapture back into the trading range. And I would almost argue already that weekly candle that we had in early June, on the 2nd of June, was possibly already enough to create that flush. You can look at what a reversal candle that looks like. So for now, you're just chopping about, consolidating, building up enough momentum for the next major move towards the upside, with our next intended target between that $120,000 and $130,000 mark over here. Price is struggling with the orange RSI level over there, or the downsloping trend line. That is our secondary trend line. We expect this to break and then price to eventually move up towards this one, which it depends when it hits. That's going to be a major resistance. So that's the weekly time frame. In terms of this candle over here that we printed yesterday for the bulls, that looks very bearish, of course, because you're rejecting from a daily range high, which is the yellow line. But I'm going to give more emphasis and focus to the closing candles, which means if we switch this onto a line chart over there, the price is still closing above the 9 and the 18 EMA, which is in a bullish posturing. It's also closing above the 50, which is rising pretty aggressively, acting as major support. And that, therefore, this tells you it's just a matter of time before you see a meaningful breakout. And in fact, if you look at these candles again, Friday the 13th of June, this is called reading the tape. And if you read the tape, what the tape is telling you is that even that war news could hardly break price down. Came immediately into key support, bounced off of that, closed higher, and therefore it's telling you that the market does want to go higher. As long as you can remove some of these additional risk factors like the war news, the FOMC, it's telling you that the market wants to mark up. So you're looking to survive that over the course of the next coming days. If that blows over, well, we expect this to blow through and prices to move high over there. So another chart that we're looking at, as long as price action on the USDT dominance remains below this massive SR flip region, 5%, as long as you hold below that and below the 50 and 200 EMA, I do expect that eventually this will break. Now, remember, chart patterns can morph and change. Previously, we had this marked out a little bit more like a triangle or wedge over here, but now it's meeting the criteria that seems to fit more specifically with a bear flag, which is still relevant. So as soon as you can take out the most recent low, which I'm going to highlight over here, let's use maybe a circle. As soon as you can take out that low over there, you should expect acceleration towards the downside on USDT dominance, and that's going to mean new money flowing into the crypto markets and everything else should go up. So here's our low time frame gauge. In the very, very low time frame, you are finding support at the 50% level of this overall range, with that being the range low, that being the range high. So in the short term, this is on the 4-hour time frame, we just need to see a couple of candle closes below, and then inevitably you should take out that low, and that should start to accelerate you much quicker towards the downside. And that's what we're waiting for. And that could bring retail. That could, right? For now, no retail, but that, or some retail, very few retail. You are retail, I'm retail. If you're not trading an institutional fund, which some of you actually are that watch the show, which is crazy, but for 99% of you, you're all retail, trading your own book, your own account, and therefore we're waiting for the mass retail to return. We haven't actually seen that at all. So if this does break towards the upside with USDT dominance breaking down, that means a lot of new money coming into the market. And then unfortunately for those late retail suckers, they probably are going to come back, but they're only going to come back somewhere over here, which is pretty much at the exact top. Now, don't necessarily quote me on the trillions over here, that it's going to be 4 trillion and it's all over. The point is, when you start to challenge those highs from November and you start to break above that, I believe that's where the retail masses will come in. And right now, you're not that far away. So it means just a little bit more of a squeeze higher percentage-wise. You just need to see about another 15, 16%, and they should begin to trickle in. And then as this rises exponentially, they'll come back quicker and quicker. So we're still waiting for that over there on total cryptocurrency market cap. And what always could bring it is the breakdown on the Bitcoin dominance. We've seen crosses towards the downside before, with the MACD breaking the zero line and the moving averages crossing from quite a height over there. And understand this, it did create nice, exciting moves, but it didn't bring retail masses, right? If you look over here, that was your crossover there. That happened in, June 2023. Small move towards the downside. MACD immediately picks up, and the Bitcoin dominance continues to rise. The difference is this: at this point in time, we're still sitting in the middle of no man's land. Right now, we are approaching an extremity, which means that we should take this quite seriously. So it's still marking up. Don't get me wrong, Bitcoin dominance is still very strong. It's still climbing over here, but I expect major resistance, even if it is able to get into this territory over here. I definitely expect some sort of meaningful reaction in the form of a strong pullback, or possibly even a full-on reversal from the pink zone, 66 to 69%. So I'm still watching ETH BTC. We'll have a look at Sol ETH as well. So Solana measured against ETH and Sol BTC. And the reason why is this, right? Let's just quickly go to that. Where is it? Here we have it. Solana ETF approval by 31st of July. If that does happen in the next month and a bit, right, of course, that's going to create a little bit of a resurgence back into Solana. So we'll talk about that as, call it the top 2 picks, right? Is this going to meet the criteria to be part of the top 2 picks? Well, Polymarkets is voting at 74% yes. So we need to see this hold over here. RSI is defending that 50 level, needs to maintain that and break back above the downsloping trend line. If that does play ball and you see a breakdown in Bitcoin dominance, that could lead to almost a 40% move in terms of an outperformance of ETH versus Bitcoin, meaning ETH outperforms Bitcoin. If this fails, you could be putting in both a Bart-Simpson pattern on ETH USD as well as ETH BTC, which would therefore look like this. That would mean that is distribution, and you could retrace the entirety of the move, and that would create immense pain for the altcoin holders, right? Maybe one final capitulation is on the cards. I don't know. Right now, all I can tell you is that we're holding this level marginally, and it's probably going to be decided by the inflection points around this war situation, as well as the FOMC with oil prices now rising, right? That if they did do some sort of a emergency hike, of course, that's going to drop this down pretty aggressively, which, long story short, basically means that right now, Bitcoin is still probably your least risky bet. If you want exposure to the crypto markets for upside potential, then your least risky upside potential is still actually Bitcoin. until the tides fully turn. This could be a fake out towards the upside, and then this smacks back down. So you don't want to necessarily have all of your eggs in one basket or necessarily sell your Bitcoin now for altcoins. It's still grinding higher. So let's quickly have a look over here. ETH, however, is seeing new flows, net inflows, pretty significant net inflows, actually reaching the top of the charts for the net inflows with a 7-day moving average. So, we're still following that cyclical path. If Bitcoin dominance does break down, it's always been Bitcoin first, then ETH, then other large caps. And then after that, you start to move into the mid caps and low caps. All right. So ETH liquidity still building overhead. It hasn't built up enough yet. If you look on the other time frames, it's pretty much been flushed. There is no liquidity really. You can have a look over here. I got a little bit more on the downside in this regard, but still trying to work out where the biggest draw of liquidity is for ETH right now. So we'll look at that in terms of the Monday range levels. This is still meeting the ascending triangle criteria, which has a measured move breaking you out to about 3,300, which ever since these lows has been our target for Ethereum, right? So still holding that as per a trade setup. Okay, so let's talk about a couple of other things. Oh, one more thing. If you do want to trade any of these things, we'll have a look at Solana as well over here. Beyond the offering of CFDs, Forex pairs, etc. on Bybit, you can also register now to trade the Trademasters Grand Prix. There is, I believe it's $1.5 million. $1.5 million that's up for grabs. I see it's based on derivatives volume. Okay, it's based on derivatives volume. Everything is listed below for those of you that want to trade that Trademasters Grand Prix. $1.5 million, there it is. And you get invited to a VIP Gala if you come. I think it's within the top 3. Okay, continuing on over here. Let's have a look at Solana, and then we can take a couple of altcoin requests. Solana is still holding that little order block over here. So you really do want to see prices start to move very soon. You're coming back down towards the entry on this trade setup. I think it's fair game to still leave your stop losses over there. And we need to look at Sol against ETH. So firstly, Sol BTC. Okay, still bleeding, still coming down. This is what I'm talking about. BTC is theoretically still the better bet. But let's say, for example, what should you pick over ETH versus Sol? Well, this is also broken down, created new swing lows, but we identified each time that the RSI came into any of these key levels, which it has elicited a short-term bounce. And you are coming into a pretty key, significant area over here. You got a SR flip, previous resistance, flips it into support 1, 2, third time. The third time may still lead to a bounce, which means in terms of a risk to reward setup over here, this is still a sensible long trade setup. And maybe it's going to line up with something around that, that ETF approval that may begin to get priced in. So what I'd be looking at is this in the short term. If we go back to Sol, and this is going to be relevant across, it doesn't matter what coin you're looking at. You got your Monday high, you got your Monday low over here. What you're looking at is if this does sweep back down into the low on Solana, Solana USD over here, if you do sweep back down to the low, then you start to look for your trade setup over there. Deviation, long trade, right? Stop loss below those recent lows, trade it back towards the high. If that breaks above the high, you might have a better trade setup. So right now, everything is closer to the lows than the highs. Some coins have even swept those lows. Let's quickly look at 𝗬𝗎. Very close. 𝗬𝗎 could do this in the next, because I'm on a 5-minute chart. So in the next couple of hours, you might actually see 𝗬𝗎 sweeping that trading low. So I think these are still the best bets. XRP, Solana, 𝗬𝗎, Sonic, and then ETH are still the best bets. Big ranges. We spoke about it on Tron over there. Let's quickly go to ETH on the 5-minute time frame. So ETH still holding up, still showing that relative strength, right? Look at a lot of the coins are trading already somewhere around here. ETH still holding up all the way near the Monday mid-range. Okay, let me know in the comments if there's any Monday range trades that you found. We can bring those up. We'll have a look at those. Okay, let's quickly see Bitcoin in terms of Bitcoin's levels. Also holding up relatively strong against the rest of the market. Both BTC and ETH in a similar level, whereas a lot of the altcoins are already trading all the way back down at their Monday lows. All right. Let's see, Cardano. We have to look at Hype as well. Cardano working its way down. Let's have a look at Hype. I think Hype would be a good long as well. If you do sweep the Monday low on Hype, Hype has shown insane relative strength against the rest of the market. So any sweeps into that Monday low, deviations over there, nice long trade, you can trade it back to the Monday high. For those of you that are confused, maybe you're new, guys, I do explain this at length in Whale School. We have already started, but you can join for Wednesday as the next workshop. There is a link in the description below, and it is free. If you use that link below, it's free. You don't have to sign up and pay $2,000. Okay. All right. What else? What else? Fartcoin. Sure. Let's have a look at some of the, let's see some of the memes. The memes pumped pretty hard over the course of the weekend and Monday. So I'm curious, right? Look at that. Monday low. So Pepe, pretty big Monday range. Okay. Pretty big Monday range. Percentage wise, that is almost a 10% range, similar to Tron. So use some of the high timeframes for a little bit of context over here. But I mean, that's a nice sweep. Very, very nice sweep already. Going back on the 5 minute. So what I'd be waiting for over here, I wouldn't long it over here. I'd wait for either proper sweep or reclaim of that 50 EMA. We've explained the strategy at length. So you're waiting for the EMA to come down, something like that. Price should drop a little bit more on Pepe. Reclaim, get back above the moving average over there. Let the moving average roll over. You'll probably chop down a few more times into the Monday low with a few wicks. You buy those wicks, stop loss goes below. You reclaim the EMA, and you can start to trade this all the way back to the Monday high. Okay. Okay, Mog, still far away from the Monday low. Brett, not too far from Monday low. Ponky, getting there, close. Goat. We'll just have a look if anything else has swept those lows yet. Fartcoin. Okay, Fartcoin has swept the lows. So this is a primary example. Okay, Fartcoin is a primary example, right? Big move up from the high, sweeps all the way down, takes out the low, attempting and fighting to reclaim. So this is what I'm talking about. If you have a look at this, you can see now that 50 EMA is starting to roll over. It's starting to reclaim or roll back up, not roll over, but roll back up. You're looking for this to continue its move towards the upside. So any of these little moves that come down over here, you can start to accumulate. You can buy in slowly, right? Accumulate slowly. You have a little bit of a trend line that you can draw over here. Just see on the 5 minute time frame if it can hold that. And then if you can start to break structure like this, so you're looking for something like this, right? This is probably going to be your lower high relative to this one. There you go. Lower high, lower high. So you're looking to buy into the zone. As price comes down and it can hold that 50 EMA, even though you might have a little wick that runs through over there, that becomes an opportunity to scale into the position. Tight stop loss down here for now. I would go below these lows. Tight stop loss over there at about 113, $1.13. Buying into the zone over here. See if it can hold the 50. If it can hold that and maintain that. The next move up, if it breaks the yellow line, closes candles up here, comes back down, forms in the high low. Now you know you're in the money. That's it. The trade's in. It's locked in. You can start to eliminate some risk, raise your stop loss a little bit higher, and you can start to target all the way up to the Monday high. Percentage-wise, let's have a look at this in terms of a trade setup, just hypothetically. Remember, with these trades, I mostly enter into these things manually. I'm not setting hard limit orders or anything like that. I'm observing manually as price action unfolds. So let's quickly go to the long trade over here. You'd be looking at something like this. For now, I'd leave a pretty loose stop loss below those lows. But does this trade make sense? Well, in theory, yes, it does. 3-to-1 risk to reward ratio. Very, very, very favorable trade setup. All right. So for every dollar you're risking, you could win $3. How big is the move? 12.5%. That's a sizable move without even touching any leverage. So you could basically just take this trade on spot. Okay. Of course, you can't throw your entire account in, because if you get stopped out, you lose 4% of your trading account. So if you take 1/4 of that, a quarter of your trading account, well, this is a simple 1% risk on this trade. Okay. So there it is. Price is coming into that key level right now. Looking pretty decent. I guess we can watch this. We can see if that holds. What are we on in terms of the timing count over here? Let's just go on the 3 minute time frame. Okay, we just reset. So that is a 5 minute candle. So you can see a little bit of buying pressure stepping in. I would scale in. That's it. All you have to do is scale into the position like this. Let's grab a circle. So there you go. Expectation, set a grid. Expect a couple of wicks to fall through into this region. Buying a little bit over here. Buying as it comes down. Buy, all the way down to about 115. All right. Easy trade setup for you guys. If you want to take this trade right now, there is a link below, guys. You can sign up to Bybit. That way you enter immediately into the Grand Prix trade competition as well. $1.5 million up for grabs. Okay, let's go back to, we'll review Altcoin. Okay, cool. Let's continue. What else have we got over here? Here's another one. Bonk already swept the level. The difference between Bonk and Altcoin is, well, besides the name, it hasn't reclaimed the 50 EMA yet. So that's a little bit of additional confluence. If you can start to reclaim that 50 like that, right? That starts to give you a little bit of additional confluence. Now you have a little bit of a low time frame trend that's on your side as well. Remember, guys, when you do these things as well, at least use a little bit of context, right? Just go on some of the high time frames and work your way down. For example, if this thing looks absolutely topped on the daily, it's probably a bad trade to take. But if you're looking for a quick trade, intraday trade, Monday range trade, there it is. Good opportunity. All right. 𝗨𝗏 also coming in. But I prefer to stick with the things that have high liquidity, like, Nairo and 𝗨𝗏 and Landwolf and these things. They don't have high liquidity. But, Bonk and Altcoin, those have great liquidity. Look at the liquidity on this. You can see the way, look at how unnatural the candles look. This is pure market maker trading, right? The market maker is controlling the price. So obviously a lot of these projects, they pay a market maker, and the market maker keeps the chart going. Otherwise, what will happen is if they didn't, there would just be no trading, right? And then you'll just have like these dots over here, and there would just be like blank space from there to there until someone takes a trade. But you can still spot if a market maker is trading this thing, which they are. There's no real trading volume on Landwolf, 𝗨𝗏, Nairo. Let's see Mudeng. Mudeng still looks okay. Goku still looks okay, actually, even though there's no market maker on this. But Monday low, holding, Giga. I mean, this one looks bad for a coin that had such a high market cap. Dogecoin, not so great. Andy, already taken out the low. I would skip that. SPX, a lot of liquidity. Great one. Here's a great one, right? There's a trade pretty much right here as well right now. Looking at SPX, so you can probably move that in alignment. I'll put that with, where are coins? Altcoin. We'll put that just below Altcoin. Okay, so SPX we know has a lot of liquidity. This thing trades with huge volume. You can always check the volumes as well by just looking at CoinGecko, CoinMarketCap, and you can go and look over there. So for now, trying to deviate the Monday low, if this can start to recapture and you're looking for the same thing, you want to see a low time frame break of structure. If you can do that, that becomes a long trade. So I would let a couple more 5-minute candles print over here on this. Maybe it breaks back above the 50 and then any little throwbacks into the Monday low. You have a trade set up over there on SPX. Stop loss goes below. So you're looking for something like that. Let those EMAs roll over and then start to turn back towards the upside. Percentage move. How does this look relative to Altcoin, which was giving us a 12% move from low to high? Even better, 18% move. That is pretty sizable. Pretty sizable. SPX 6,900, right? If there's one guy that works for his bags, it's Murad. Murad's on TikTok. He's shelling his bags hard. He's bringing us at least, he's bringing us some new retail audience. I mean, what are you guys doing? Make sure you get on TikTok and you start shelling our bags as well. Okay. All right, let's quickly check Altcoin. How's it looking over here? Has it come down anymore? So you can see it's still working on that area. We'll put in a little bit of a trade setup over here. You can't quote me on this one yet because I need price action to unfold a bit more, but this is a possible setup, right? Possible setup over here. You'd be looking at something like that. Okay, it could spike lower. That's why don't quote me on this yet. I'd rather wait for more price action to unfold. I feel a little bit more confident on this Fartcoin one because we're at least developing a little bit of an uptrend over there. So there is 2 opportunities for you. All right. Guys, can you believe it, Murad? I mean, this guy had, what did his account go down to? I think he was up like insane amounts, like 50 or 60 million dollars, went down to like $3 million or something on that account. Didn't sell anything, although I'm sure he had other accounts that he was selling. That account went back to $50 million now. It's unreal. But it's the Pareto principle. Only certain things will make you most of the money, right? So most of his coins pretty much went to zero. It's only SPX that's held up. Okay, gonna flip the stock market. Yep, if it does, I think we have big problems. Big problems. All right, guys, I want to remind you, everything is over there in the link in the description below. If you haven't joined into Whale School, if you're confused about the Monday ranges, well, we are teaching all of that over there. Everything is there. And not only that, but it's also in Whale Room. That's why a lot of these guys are profitable. They have intraday trade strategies. It's not the only one. Our coaches are absolutely pros in here in terms of helping you guys succeed and go full-time trading. So use the link in the description below. That is it from me. I'll catch all of you on the next one. Hope you have a great day. We'll see how those trades unfold, and I will see you all tomorrow. Cheers for now.